Hello guys and welcome back to the channel. So it's T-minus 2 days until Palantir's earnings, and I am going to review Amit's video about Palantir's earnings because I really like this guy. I think he really upped his production quality. I speeded up his video a little bit to keep this video short. The point is, I think he's wrong about a few things in this video, and I want to point them out, and let's go through and see his predictions about Palantir's Q1 earnings. Let's keep this fun, let's keep this light. Please make sure you're subscribed to the channel, hit the like button, and let's get going.
To do anything bold in life, you have to blaze your own trail. You have to be a trailblazer. But to be a trailblazer, you have to embrace the unknown. And one of the most beautiful things to me about the Palantir community is all of us as Palantir investors at the end of the day are embracing the unknown. Is this a once-in-a-lifetime investment opportunity? Maybe. But for now, it's unknown. And in this video, I'll attempt to give my thoughts, analysis, and predictions on what to expect for Q1 2023 earnings for Palantir Technologies. Let's get into it. Hey guys.
So the first thing that I want to react to, Mr. Amit, if you're watching, I think you will be watching this video. So get rid of this blue scarf. Whatever you're trying to achieve with the blue scarf, it ain't working. And I promise you, if you would just get rid of it, the Palantir stock price would go up. I guarantee that for you, okay? So now let's begin. Let's continue.
The first thing I want to see in Palantir's Q1 2023 earnings is U.S. commercial growth. Full year 2021, they did $201 million of revenue. By full year 2022, that went up 67% to $335 million of revenue. Alex Karp has basically gone on pretty much every interview over the past couple months and has said U.S. commercial is growing like a weed. Now, last time I checked, weed makes you high. So if it's growing like a weed, it should be growing high.
Oh my God, you effing Gen Z, I don't even know what you are. Have you ever been out in a garden and seen weed? Like, he's not saying it's growing like a weed because you smoke weed, it's because the weed that is in the grass is growing really fast and everywhere, and you can't kill it because it's coming up like weed. That's why you say that. Please get that in your head. You are out in nature now. Just turn around and observe how weed grows.
And so I'm pretty excited for U.S. commercial growth because I think if it's growing high, it signals two things about Palantir's commercial business in the United States. Number one, even though their sales and their sales teams are not as strong as other enterprise companies in the SaaS space, if the product is able to sell in the United States, then at least in the United States, this team in Palantir is figuring out how to get commercial enterprises to adopt Palantir Foundry, even if their sales team is not as big as other companies. The second thing it's going to tell me about Palantir's business is that in the United States, even though we're in a pretty unstable macroeconomic environment, some would say we are definitely heading towards a recession, if U.S. commercial is able to continue to grow at these rates, that means the demand for Foundry's product is living up to its promise. If the economy goes bad and your business needs to become more efficient, more effective, and find ways to save money, Palantir software is actually able to get the job done. And if they're able to grow that well in the United States, that means U.S. businesses want to innovate, want to adapt, and they're looking at software like Foundry to be able to help them deal with an uncertain economic environment. The second.
So that was a very nice monologue, Mr. Amit. I don't think that we're going to get commercial growth. Or not in a meaningful way. I would be very, very shocked. I'm actually very worried about this. What I'm more looking forward to is them just, getting to their guidance, and I really don't think that they can beat their guidance. I might be wrong about this, but I really want them to give a good guidance about commercials. So them seeing a lot of new customers coming on. Just because how all the SaaS industry has reported, how the defense industry has reported, how everyone that is comparable to Palantir is experiencing a very tough time, I think it's impossible that you will see a big uptick in commercial growth. But let's hope for the best.
Care about for Palantir's Q1 earnings is if they are GAAP profitable. Now, this is one of the biggest things to worry about when it comes to Palantir because last quarter in Q4 2022, they ended up being GAAP profitable. They showed an EPS and earnings per share of 0.01 cents. Alex Karp in August of 2022 said that they're not going to be GAAP profitable till 2025, and they were 2 years ahead of schedule. Now, why is it really important for them to become GAAP profitable for a consecutive quarter? The S&P 500, which is the largest index fund of the 500 biggest companies in America, and the committee that governs it, has said that if your company has founder-class shares as the majority of the voting shares, which Palantir does with F-class shares, that you are now eligible to be included in the S&P 500 index. And before, that wasn't the case. Palantir ends up making a really big deal out of this. I mean, they go so far as putting a public shareholder letter out to everyone saying, hey, look at this new rule that the S&P 500 committee just came up with. It's about GAAP profitability. What did we show you guys on our last earnings? We were GAAP profitable. Now, to actually be included in the index, you have to have a $12 billion market cap and be GAAP profitable for 4 consecutive quarters in a row. I just could not see for the life of me, and if this happens, this would be really one of the most strategic errors in terms of marketing and PR. For Palantir to make a big deal out of this S&P 500 change rule, I mean, published a shareholder letter, basically said, hey, the companies that are founder-led have the best vision, can become the biggest companies, and because we're founder-led, we weren't eligible before, but now we are. So you guys should care about this, and then show up the next quarter and not be GAAP profitable. Now, I
actually 100% agree with this. I feel that they have cornered themselves into a place where they basically have to be GAAP profitable, otherwise they look like idiots. But I disagree sort of with the fact that Palantir has to be GAAP profitable. Okay, as all of us long-term investors, please let me know in the comments below. We didn't invest into Palantir because they were going to be 1 cent EPS GAAP profitable this quarter. I actually don't give a flying F about it. The reason why this is such a big deal is because if they would be included in the S&P 500, if they're GAAP profitable now, then in 2 quarters from now, they have the possibility to be included. That would be a very big buying pressure that would come to the stock because of all the funds and index funds and all other investors that will have to add Palantir now as part of their holdings. So that would be very, very beneficial and give a short-term, quite big boost to the stock price. And that's why we are so much into this. But for the long-term story and the thesis, if they're 1 cent EPS GAAP positive or they lose 1 cent on the bottom line, actually doesn't really matter.
Super sympathetic to a company not being able to beat its earnings in the macroeconomic environment we have right now. But the problem is Palantir kind of put this upon themselves.
Yeah.
Last quarter, they didn't need to get GAAP profitable, but they did whatever financial engineering they had to do to become GAAP profitable, signaling to the market, hey, you can't say we're not profitable anymore. We're 2 years ahead of schedule. Now we're profitable. And then 3 months later, they make a big deal out of this new rule change that says companies that are GAAP profitable and have founder class shares can become part of the S&P 500, which means the only thing stopping Palantir from getting into the S&P 500, which means thousands of hedge funds and institutional investors will now have to own a piece of Palantir, which is bullish, good news, is them becoming GAAP profitable. Now, could they end up not being GAAP profitable? Sure, it's possible. It's just I don't see, with all the hoopla they've created over the past couple months about why GAAP profitability matters, to end up showing up in a quarter, especially when you're saying your U.S. commercial business is growing like a weed and not figuring out how to do the financial engineering you need to do to maintain GAAP profitability. If they are not GAAP profitable, it would be the biggest surprise to me of Q1 earnings. I don't know what financial engineering Palantir is going to have to do this quarter, but I hope whatever they do, they can just figure out how to become GAAP profitable. Hey, you work for UPS, right?
Yeah, I do. What's up?
What do you think Palantir is going to deliver this quarter?
I definitely think they're going to deliver a decrease in stock-based compensation.
Now,
oh my God, that was just so smooth. I have to give it to you, Amit. That was just very masterfully done. Was this a random UPS guy that you just met and you thought to put him in the video? Please let me know in the comment below, because if it was, it's genius. Or was this your editor who you just hired in a UPS jacket? Anyways, I digress. Another thing, I can see you changed out your fake brick walls. We all know that your brick walls are fake, to this green screened background, which is obviously fake. We all know that you're not outside. And this is also something that is wrong in this video. And this is not helping Palantir's stock price. So let's go.
Base compensation has been coming down pretty significantly every year since they went public. Last year, it was about 27.5% of a decrease from the year prior. The year prior, 2021, around 776 million, down to about 564 million in 2022. For them to stay on track with that, let's just call it a decrease of 30% for this year. That means total SBC for 2023 would come in at around $394 million, which means every quarter they would be paying about $98 million a quarter when it comes to stock-based comp. Look, if they can do that, that would be really, really exciting. I think it will be a bit difficult for them, at least in this quarter, to have a meaningful reduction, because if they ramped up on sales, which means we have a decent level of commercial revenue growth, then they have to compensate salesmen, right? They have to compensate their employees. Snowflake, as a comparable, spends 70% of their revenues on sales and marketing. Palantir, I don't think, is going to have that much of a comparison because the product is actually good and they just don't have that big of a sales force. And yes, the product is actually good, so it sells itself a little bit more than what you have to sell with these steak dinners that Alex Karp talks about. The less stock-based compensation you have, the less overall expenses you have, the better chance Palantir can do some more financial engineering to get GAAP profitability. Why this is also important is because if you become GAAP profitable, those shares that you gave to employees via stock-based compensation actually have a chance to appreciate. Again, Wall Street is not going to respect this company unless they're able to become profitable. That's when hedge funds...
So this point about the stock-based compensation, I think it was a very big thing about Palantir when it was crazy high a year ago. It's been steadily going down, and I think nobody really will blink an eye as long as the stock-based compensation keeps going down, and I think that they will do that. And I also think that recently they have experienced a lot of pressure to increase the stock price because they have given out so much stock-based compensation, and they need to show the employees that this company is going somewhere, and then they need to boost the morale. So I think that it is a very good motivating factor, but I don't think it's such a big deal anymore.
In the year, GAAP profitable. Now the fourth thing I care about to see in Palantir's Q1 2023 earnings is customer growth. Last quarter...
Okay, so here is the third thing that I think Amit is very, very wrong about. Get some effing shoes, man. Like, what the heck are you thinking? You're sitting in your home with this green screen background and not having even any shoes. Put some shoes on.
They added 30 net new clients, and they closed 55 deals, 5 of which were at least $1 million, 11 of which were at least $5 million. I am very curious to see how many new customers can they get. We saw FounderCon that happened 2 times, once I believe in October and then once around February, where you had all these different clients. You had Tampa Bay General Hospital, you had Cardinal Health, and they got on stage and they just started talking about the benefits of using Palantir. I actually know someone who talked to one of the people at FounderCon who was representing Tampa Bay General Hospital, and he said, hey, why didn't you use alternatives to Palantir? And the guy looked at him dead in the face and said, there were no alternatives. These are the types of clients. I know they're not scaling at thousands and thousands and thousands of clients a quarter like other SaaS businesses, but they're getting clients that are using their software because there really is no other software like it, which is the tech of Palantir. And at the end of the day, if you're investing in Palantir, you're hopefully investing in a technology that one day can get to that level of scale.
Exactly. So I believe it's a common misunderstanding about Palantir is that, yes, they're not getting thousands of new customers every quarter like some other SaaS companies, but they scale within the organization. So they go in like a cancer. I know it's probably not the best, or it's probably a very bad comparison, but this is what they do. Okay, they show up in the company, and like cancer, they spread through the company and they scale very much in one business. So this is why it's super important, as you said, to see that they're getting new customers. And normally these new customers, they don't show up on the income statement right away because they start very small and then they scale. And this is probably what I look forward to most, to show us that the thesis is still intact and the company is alive and well. So new customers and growing number of customers.
Thing I care about on Palantir's Q1 2023 earnings is demand for AIP. AIP was the new platform Palantir introduced, and it's basically like ChatGPT for the enterprise, but secure LLMs that are actually trained on data that puts privacy and ethics of AI in terms of the implementation.
So my question, again, this is a very important Palantir question. Are you standing in the weeds now in socks? That is just idiotic. What the heck are you doing? Get some normal shoes on and get rid of the scarf.
Infrastructure of AI at the center of the technology. Now, the question becomes, how much demand is Palantir seeing? Palantir introduced this about a month ago, and it was really interesting. They then introduced the defense version of it, the military version of it. Even Elon Musk ended up responding to that on Twitter because of how unique and exciting the product was. The question is it really marketable? Is it sellable? Are you seeing it grow in interest? I don't expect them to have any revenue numbers from AIP, especially because it's still in the beta stages. But I do expect some analysts to ask the questions around, what is demand like? Why do you think this product is so fundamentally differentiated from the rest of the products that are going to come on the market? And where do you see the product roadmap over the next 10 years. Now, Palantir and Alex Karp have laid out this entire vision for us over the past month as Karp has been doing interviews. But on our earnings call, maybe we can get a little bit more of the financial implications attached to this. Alex Karp has said publicly the companies that secure the data and train their models on the secure data and then can implement it within the enterprise or government are going to be the companies that succeed in the next 5-10 years and actually capture most of the market. Because not only is training the model hard, but effectively implementing it safely in the business is even harder.
So I 100% agree with this. This is something that could definitely cause a pump in the Palantir stock price. If they can give very good guidance about AIP, if they can be very detailed, explain to us what is exactly their timeline, how is customers reacting to this, what is happening on that front. Unfortunately, I don't have my hopes high up because Palantir has not been great at communicating with investors. You kind of have to figure it out on your own. So it's only smart investors like you and me and Amit when he's not wearing the scarf and he has shoes on. We are the ones that get this. So my hopes are not high, but this is the thing that can be potentially the most exciting about the earnings. So this was my Amit's review, and I promise you if he takes off his scarf and puts some shoes on, the stock will go at least 10% up on earnings, and I challenge you, Amit, to try this. Thank you so much for watching, guys. Let me know in the comments what you think. Please make sure you subscribe. Hit me up on Twitter. My Twitter handle is Vince@bullish, and I'll see you in the next video. Ciao, ciao.